Monthly household income and expenses. And then we get to Section 7, which is going to be your monthly household income and expense information. In this case, you make $4,500 gross wages a month, and your spouse makes $4,000 monthly gross wages. If you have other household income, whether it is a non-liable spouse that's not involved, interest and dividends distributions, or net rental income, include it here. If you are self-employed, then you're going to pull that number from box C on the prior page for your business income and plug it in here on line 36. Also, if you own a corporation, don't list corporate income and expenses on the Form 433A OIC. These should go on Form 433B OIC. Next, you'll add in any child support or alimony that you receive. The total household income in this fictional case is going to be $8,500, which you will enter in box D. Be sure to list gross monthly income rather than using net income or annual income figures, and use the most current information instead of information from last year or prior years. Note, your entire income should also include income that is considered as not taxable and may not be included on a tax return. And the IRS may ask for an update of this information later. That's going to move us down to our monthly household expenses category. You'll see this note here, where it says for expenses claimed in boxes 39 and 45 only, you should list the full amount of the allowable standard, even if the actual amount you pay is less. And then it tells you where you can find these allowable standards. Just search the term financial standards on www.irs.gov and it'll pull up the Collection Financial Standards page. So you'll want to make sure that you look at those numbers. So here, for the food, clothing, and miscellaneous, I've pulled the allowable standard for a household of 2 individuals based on what we filled out on the first page of this form as $1,298. I've brought in housing utility expenses for $1,895 a month. That's going to cover their mortgage. It's also going to cover all their monthly costs of property taxes, home insurance, maintenance, dues, fees, utilities, phone, cell phone, cable, and internet bills. Next, I've included the vehicle loan or lease payment that we calculated earlier at $500 a month that was on the first vehicle. Then we have vehicle operating costs of $462 and no public transportation. These fictional taxpayers pay $1,000 a month for their health insurance premiums and are allowed $112 a month for out-of-pocket health care expenses. Again, the out-of-pocket health care expenses on line 45 come directly from the standards. You can use the numbers from the standards even if you pay less, as that's the standard allotment. There are no court-ordered payments, no child care, no term life insurance. They're paying $489 a month for state income taxes, $2,040 a month for federal income taxes, and they do not have any secured debts or any delinquent state taxes. Please keep in mind that monthly credit card payments and unsecured loan payments are not considered to be secured debts. So we've totaled up all these expenses to get total household expenses of $7,796 in box E. We had $8,500 of income, so now we have a remaining monthly income of $704 for box F.